Therefore, it doesn't justify 60 or 80 PE ratio. But if it's only $67, shouldn't it just go down to, let's say, 60? You're talking about a $10 drop. So this drop could be an overreaction. I mean, I'm not a stock guy. I'm not going to go care about the, ups and downs in the next month or two. But I'm just trying to piece together all the information I've got.
Real quick, I do want to hit on the topic of NVIDIA. I don't know if you guys saw this, but and we'll go back to you, Herbert, because I know you want to talk about something cool that you're working on. And then we're going to do something very special. We're going to have Elon himself give us some answers from
special
the call.
Guest.
Yes, special guest.
Is Zach Kirkhorn going to make a return? I don't know.
We'll see. Did you know Nancy Pelosi's options on NVIDIA calls have made her $700,000 in under 2 months? More than triple her annual salary of $223,000. The GOAT, Nancy Pelosi. Maybe we should get her on this podcast one of these days. What do you think about that?
People talk about Buffett all the time, but man, Nancy Pelosi is the legit GOAT.
The GOAT. The GOAT.
Yeah, I think Portnoy bought Tesla calls from March. I think 230, 240.
Oh boy.
Different track record. We'll see.
We're about to get a rant from him on X. Herbert, go ahead and talk to us about your special project.
Okay, yeah. No, thank you for doing that. I haven't actually done this before, but I do advertise a little bit on my YouTube channel sometimes that on TeslaInvestor.com, I've put together 15 modules that are, the resources that a Tesla investor would like. So just check that out. As you know, you also can get the free milestone tables. Just sign up for the newsletter and you'll get that. So if you're a Tesla investor and you want to know as much as you can about Tesla, just check out this website, TeslaInvestor.com. Thanks, guys.
What a professional. Damn, 10 out of 10. A lot better than my crappy thing that I did earlier. Sorry, Brandon. Maybe we'll get you one, hopefully.
Well, I have a question for you guys real quick.
Yeah,
for the near term, I mean, we're clearly negative sentiments going from 250 down to 200 in the last month or so. A year ago, it got down to 100 and 120. It was like in a 120 range before it finally bounced back up aggressively to 200 plus in the spring, I think, or early summer. So at some point, we know, the stock's going to rebound. If it happens sooner than later, do you think, I think, Herbert, you were saying something's got to change the momentum of the stock. It can change quick in a couple of weeks and be way up. And I've seen that so many times too. What do you got? And I've talked to some, I put out some tweets trying to figure out when this Delaware court case is going to be settled, because it's been over a year. And it's like, we're in the dark. Could it be 5 years, 3 years? But this guy, David Taylor, you may have seen him from time to time on Twitter. He's, got a few thousand followers, but he said he's connected and he replied, he knows people in the Delaware court system, and it's most likely going to be settled in the next few weeks, which would be great. And do you think, I think once it's settled, I think almost ASAP, like almost a week or 2 weeks later, as soon as the next board meeting happens, they'll confirm the next package for Elon, comp package, and go public with that. Do you think that could turn the stock momentum around if suddenly a month from now there's a new comp package announced for Elon and it's like, all right, when they get the 10 trillion or 8 trillion market cap, Elon gets this. Do you think something like that would turn, do you guys think that could turn the sentiment around on the stock, because it'll make investors think a little bigger again?
I mean, I think for maybe, but I still feel like the overarching story here, let me bring myself up here real quick. The overarching story here is I think results matter more than narrative. But I do, what's interesting about the comp package is that, and my assumption is this comp package will have very specific goals surrounding market cap, maybe revenue from FSD, maybe energy deployment, maybe bot creation, maybe number of robotaxis on the road, right? Robotaxi miles. My God, we finally have a beautiful person on the panel. Jeez, this whole time we've been us 7 bozos. But I think that might change. It might make an impact. You're welcome. But I think I still feel like results is what's really going to change the thing here. I don't think the comp package will do anything, in my opinion.
Well, I think on this earnings call, Elon needs to come out and assert clarify what he meant, and kind of assert his commitment to the company. So I think that's important. I agree. Results matter, but there is a sentiment here. There's an issue that I think needs to be cleared up. I think it's out there. It's hard to really explain. If you look at the first set, a couple of weeks of trading days this year, if you look at the Magnificent Seven, they're basically up a percent or two to 20, 12% or more. In the case of Nvidia, I think it's even higher. So it's hard to explain, like, why would Tesla be down this much, other than that there's something, again, record production, record deliveries. Obviously there's concerns, about the performance of the business, but, coming off of that P&D, it looks like, this issue and this sentiment it has been weighing on the stock. So I think it'll have some impact, but again, I'm not one of those that it's hard to really prescribe, like, well, this will do it, and this, this catalyst will do this, and this catalyst will do that on that day. I think it's really hard to prescribe. Even this after hours action, I think it's really hard to say, like, well, what is this? I mean, what are they ultimately reacting to? I think we can surmise some things, but I think it's really going to come down to the tone on the call, and do they actually forecast something meaningful, something that's not in the context of the actual earnings report? Is there a voiceover that's meaningful? I think it's what it's going to come down to.
Let's go ahead and bring in Alexandra. She just joined us. Thank you for joining us. What are your thoughts? Give it to us.
You don't mind that I sum
Give it
up
to
where I
us.
am? I didn't listen to any of what you've said so far. I'm getting old. I'm doing this really slow, but let me sum up where I am. I actually think the positives by far outweigh this Q4 earnings. I like that they said we're positioning ourselves between the two growth waves of the Model 3Y and the next generation coming. So we're in this intermediate phase. You have to have the time to sit out 2024. And I know for those that have the feeling that 2022 and 2023 were already difficult to sit out, well, you're going to sit out one more. COGS are down to 36,000. Shout out to Jeff. He's been telling us for months that this is coming, and here we are. Auto gross margins now stabilizing at 17.2. That's good. Free cash flow was, for me, the biggest good surprise, because I didn't expect much, yet we had actually 47% of the 2023 free cash flow now in the fourth quarter. We're back to 4.4 billion for the whole year. That's good. That's giving us our 29 billion of cash. That's actually putting in question what I've been calling for, that we need a capital raise soon. They are saying it very clearly. They think they can stem everything with what they have. All good to them. I mean, I'm always looking at the other Mag 5 because Amazon doesn't give their research and development numbers. So compared to them, I found research and development numbers from Tesla low. I know they are lean and mean. I love that, but I just want to make sure they have enough money for everything they want to do. Operating margin, together with the auto gross margin, have bottomed 8.2 now. We're up from the 7.6. Energy growth and profitability were great, but the accounting Q4 is choppy. We have Matt with us. He has been telling us for years, this is always difficult to see which quarter they come in. So there is something coming soon. The whole CapEx for 2023 was just short of the 9 billion they guided, 8.89. And with a clear mention that this is really going all to AI and research and development. Now, research and development in Q4 was 1.28 billion. So total research and development was 5 billion. I mean, that is a good number. I'm not saying that's not good, but compare that, I'm doing that again, with the other Mag 5, that is really low. So just, hoping that it's lean and mean. 800 million FSD beta miles worldwide. That's great. And obviously the big elephant in the room, there's no clear guidance yet on 2024 volume growth, maybe notably lower than the growth rate we had in 23, which was 38%. Energy should outpace auto. That's a big statement. I mean, we'll see what that happens. And then, James not here, but maybe somebody else knows. What's this 5.9 billion one-time non-cash tax benefit? I mean, that is just crazy. 6 billion, here they are. Wish that would happen to my bank account from time to time. But I know it was non-cash, but still. So other than that, I thought it was really, encouraging to read. I'm not surprised that the stock hardly moves, but I mean, what can they do with that? They have confirmation on the couple of numbers that they were looking for. They don't have their guidance, so now it's all waiting for Elon. Did he take his vitamins today or did he not?
Thank you. That was such a perfect summary here. We also have Gary in the background, but Gary, I don't know if you can hear us, but you're gray on here, so or actually blacked out. Gary Black is blacked out. Look at that, perfect. So I would see if you can restart your machine that you're using, Gary, and then we can bring you back in. Any questions from Alexandra before we bring in our very special guest, Elon Musk?
Yeah, quick question for Alexandra. I'm curious on what your take was on the outlook for volumes in 2024. How you interpreted that?
Well, I think they don't want to put a number in writing, right? So for me, this is at the moment rather negative. I would have liked a 2.2 or whatever, or I would have liked a certain percentage saying, okay, we'll match this year's 38% or whatever. But let's wait and see what he says. It just seems that they are a little bit stuck between a rock and a hard place. What is happening with interest rates? What is happening with our worldwide expansion? How long will it take until we have that next gen car? How quickly can we produce? I don't know whether you've seen that on Twitter. Somebody seems to know that the first 50,000 Cybertrucks will all be foundation models. So how quickly will they push those out? So there seems just to be so many question marks that they didn't want to be precise, which I don't like. And you know me, good old German lady. But I'm giving them the benefit of the doubt until we hear them later on.
I think it's well said.
Let me see. Gary, can you hear us?
I can.
Okay, we can't see you, but maybe actually this is perfect. Look at this, Gary Black in the black. I love it. Living up to your family name. What are your thoughts here, Gary?
Well, they didn't guide, and that's the reason the stock's down. The margins were better than people thought. The gross margins came in at 17.2, and as Jeff said, if you look at, I look at COGS per unit, it was down about 8.5% year to year, and ASP was down about 16%. So that's why you had auto gross margins come in better than people thought. The earnings number was 71, which that really doesn't matter because if you looked at other expense line, it was like about 3.5 cents of noise. I don't know what it was. They don't tell you, but so the real number is like 74, 75. But because they chose not to guide, that's why people are uncertain. I mean, that number could be, 2 million for this year, and it could be 2.4 million. And because they didn't guide, that's why people are pissing out the stock. So, and maybe they'll clarify that on the call. Hopefully, on the call they'll give some hints about what they're going to do with pricing this year. But Wall Street hates when companies have guided every year, and then this year they decided not to guide, and that's negative, obviously. And until I don't think the comp plan matters that much. I think it'll be in line with what was let's say the Delaware court rules that last time was fine. It'll be similar to last time. I don't think that really resolves anything. They've got to give guidance, so you can't just stop giving guidance because you think the economy is going to be uncertain. I mean, everybody who guides then continues to guide, and once you stop guiding, you're looked upon as being negative. So that's why the stock's down. Everything else was okay. I mean, the numbers were fine.
Okay. Did you remember to turn on the light in your room, by the way, Gary? Are you working in the dark there?
No, it's light in here. I don't know why it's not showing me up.
Okay. Gary, what's your thinking about other investment analysts? I saw Gene Munster come out and saying he was quite happy with the auto gross margins, and for him that was the most important number. What do you think the others? I know that the headlines is going to be the notably lower than the growth rate achieved in 2023. That's the mainstream media. What do you think the investment analysts will say?
Again, the numbers are good. I mean, auto gross margin was better than people thought. Bloomberg was 16.7, I think, and this was 17.2. I know facts that they were saying on CNBC was 15.7. So yeah, the margins came in better than people thought. The problem is they didn't guide, and there's no discussion about pricing, and there's no discussion about auto gross margins going forward. So hopefully on the call, they'll be a little bit more clear about where the volume goes. Remember, the street's at plus 21 for year over year, and last year was plus 38%. So, they don't have to give you much. They can just tell you that, it's going to be up about 20% or something. And then there has to be some hint about what pricing is going to look like for this year. Will they continue to take pricing down? Will auto gross margins stabilize? And so that's what you're going to hear from everybody. They're all going to talk about auto gross margins were good, but there was no guidance, and that's why the stock's down.
Okay, but Gary, you saw the cost of goods fall by $1,000, right? So
Eight
are you
and a half
taking that into
percent.
consideration? Huh?
Yeah, but that's not everybody can see that though, Herbert. So I'm telling you, that's why auto gross margin came in at 17.2 because cost of goods was down on a per unit base, down 8.5%. That's a good thing. But if you're not guiding, that just tells you that maybe the numbers are worse than people think. If you look at Model Y inventories in the U.S., they're pretty high right now. One would think with a $7,500 off invoice credit, they should have some visibility about volumes. But when a company decides suddenly not to guide, that's always viewed as a negative. The knee-jerk reaction among institutions is sell and ask questions later. I'm telling you, if they decide to clarify their guidance on a conference call and say, well, we're going to be 2.2 or 2.1 or something, then the stock will go back up. But that auto gross margin was a good number. It's just they didn't guide for volumes. They didn't give any guidance.
I think one thing that's interesting about that, though, is that if I remember correctly, back in Q4 of 22, they didn't guide for 23 until Q1. If they're consistent with that, do you think that's going to change the story?
We could wait until the end of first quarter and see what they say. But last year they guided at the end of fourth quarter. The year before, I think they guided at the end of fourth quarter. I could be wrong, but when companies don't guide, investors assume the worst. It just calls into question, are they doing well or not? The two most important metrics in the whole P&L are volume and auto gross margin ex reg credits. And auto gross margin ex reg credits for fourth quarter was decent. To your point, COGS was down 8.5% year over year on a per unit basis. It was 36.3, but the average selling price is down 16.3. So, hopefully on the conference call, somebody will ask them about their pricing, outlook going forward, and they may not say anything. But, the street right now, I think for 2024 is about 17.7 for auto gross margins. So if, they give some sort of hint that says, they're not going to cut pricing that much more aggressively, that would be good. But the fact that they didn't guide for volume when they have in the past, that's a concern to people like me.
So a couple comments too. I agree with what Gary's saying on the guidance. This is Jeff, by the way, Gary. I think that 3.5% or so of COGS reduction quarter on quarter is almost unheard of. In both in
and
auto.
I look at year over year. I look at year over year.
No, I'm not done. So first off, the year on year performance is actually really good. It's very good. And if you start dissecting the recent price cuts, like you take the China one, for example, the Europe one, for example, if you do that aggregate across all their volume, it comes out to about 0.6% of MSRP, and they just printed 3.5% COGS reduction. So I think I forecast some more pricing reductions, but in line with their COGS reduction program, or they may even exceed it. The question isn't to come down to volumes. There is going to have to be a question on volumes. Are they going to be relatively flat and still printing good numbers? So they're utilizing their factory capacity, they're utilizing their supplier capacity. That's going to be key. The other thing I think will happen, I can talk about this probably on a whole separate show, is they use this statement about natural COGS reductions, and you do at some point, you do reach exhaustion in some of those things. And so, especially if volumes are flat. So then you have to introduce unnatural options. And maybe I'll talk about that when there's more time, but they have a lot of unnatural options in front of them to really put on a fabulous COGS reduction program, as they introduce the next vehicle. Because which of their suppliers are not going to want to get a shot? If you're a Tesla supplier on the Y, you ship a part on the highest volume vehicle in the world, you get the best fixed capital leverage, you get the best labor efficiency leverage ever. So you're going to do whatever you possibly can to get a slot onto the next vehicle. And that bake-off, that Reuters leak, that's starting now. And so anyway, I think there's opportunities throughout the year for that. And that's how it actually works in real life. The other thing, they have out there is the bot. And I believe that is approaching some sort of design lock over the next year. It'll be a rolling design lock, but something that they can build more volume of. And same thing there. supplier selection, bake off. Everybody wants a shot at that. So anyway, it's something for a longer broadcast, but I do think they use that term natural for a reason, because they have a lot of unnatural options. Finally, their inventory reduction, their DOI going to 15, coupled with the very high COGS reduction, that is a machine. That's not, they're not getting sloppy. That's not like like they're coming out of 2023 and inventory built up and gross margins did this, and they're not forecasting volume. They're running this machine on, it's literally a masterclass. So if anything, I think they're positioned well. It's a question about if they comment on volume guidance in any respect.
Unmute
Do we have
yourself.
special
there.
guest Elon showing up soon, or we got the call coming? I thought he was going to show up here before the conference call.
Gary, you're muted.
Hi. I agree with what you're saying, Jeff. I'm just saying the volume numbers are really important to investors, and
Yeah.
unless they clarify it, the stock's not going anywhere. I mean, it may not go down. I mean, it's down about 3%. It would have been up if they had just guided to where the street was, which was 2.2. It would have been up, a few percent, because to your point, the COGS number was good, and everybody knew what the pricing number was. And so, when you see 17.2 auto gross margin and FactSet was at 15.7, that's a big beat, right? But they blew it, and I don't know why. I don't know why they didn't just give some sort of number just to provide, or even give a range, And so you already have, I read some analyst things saying, well, the volume number is probably about 2 million for 24. Well, they don't know that. The company's not saying that, but this person, has taken it upon himself to impute that from the lack of saying anything. So I don't know. It's just disappointing because the quarter was actually not that bad,
Yeah, one thing I wanted to highlight also, if you just look at what they have in their stated production capacity in the deck, it's over 2.3 million vehicles. Now, if you back out Cybertruck, because that's ramping, whatever, you're still at 2.225 million, which is, I think, plenty of growth year over year. But they're basically saying they don't want to even guide to what they've got in capacity. So I think we're all sort of expecting them to produce less than their capacity, which is a bit of an odd situation for Tesla. So that's something that's a little bit different. And I wonder if people are kind of looking at that and doing that math also.
Okay.
Yeah, let's
go ahead, Jeff. Real quick.
It's a quick answer on that. The key on that is using roughly about 80% of that capacity. That's benchmark in the industry. And what Tesla does is they leave the year with a capacity number, then they slowly add capacity throughout the year. So that may change, that regimen may change that this year, to your point. But the key is they'll probably use less than that. But as long as it's 70% is actually really good from a utilization perspective. They can keep it above 80, they'll be in great shape. The rest of macro auto's in a much worse position when it comes to utilization. So, but hear your point.
We're having the call in 3 minutes, right?
Yeah. So the call starts in 3 minutes. Real quick, I want to bring in our special esteemed investor relations person. He's going to ask a question to our special guest, Elon Musk. So 2 minutes, 3 minutes, Emmett, please pose your question to Mr. Elon Musk here.
I didn't know I was playing Martin. I can't do Martin Viecha. Okay, I'll try.
Of course you are.
Okay. Next question comes from anonymous retail investor. Given that you moved the start of the next generation compact vehicle production to Austin, has the timeline improved so that we might see next generation platform vehicles in 2025? Elon?
Yeah, I don't know why people keep asking product-related questions on the earnings call. We're not going to be announcing any new products, obviously, on an earnings call. So we'll save that for a more appropriate venue.
Okay.
And then the next question
please.
Take your
from
vitamin.
Anonymous retail investor asks, what has been the barrier to ramping 4680 cells into the multi-million cells per week rate? And what do you expect to get there?
Yeah, I mean, in any production process, you're only going to go as fast as the worst part of your entire production process. So the barrier to ramping to millions of sales per week changes week to week and even day to day. So I don't know that there's one particular answer I can give you, but it is just, believe me, I know that line inside and out. I've spent all the time there, and it's just whack-a-mole with which part of your process sucks the most today, and then you whack that mole, and then you move on to the next piece of your process that sucks, and then you whack that mole, and eventually, if you whack enough moles, yes, the key to ramping is whacking moles, not whacking them off because that'd be bad. We don't want to say that, but just whacking the moles until the production ramps, and eventually we'll get there. So, yeah, I mean, we had liners being an issue. We had the rolling out the film being an issue. But right now, I think we're actually in a reasonably strong spot. We seem to have hit the linear part of the S curve. So I think the rate of production increases is going to ramp pretty aggressively from here. But then, of course, we're going to hit an asymptote, and we'll need to optimize again. So we're going to continue to get better. And we've actually
I ruined the last bit there. Sorry, Elon. My apologies. Please don't fire me. Okay.
I did fire you a couple of years ago, which is why you're doing what you're doing now.
Yes! Boom! What a setup.
That was beautiful.
That was
I
awesome.
can't believe we're ending this on that note. Damn it. All right. We'll make it happen, I guess. Okay. So the call is about to start. I'm just listening for it in the background. We're just waiting for them to come live. Once we go live, everybody in the panel, if you don't mind, mute your microphone, and then we'll listen to the call live together. Can you guys hear the music?
No.
You can't? Uh-oh.
No.
All right, 1 second. 1 second, please. And go. Okay, what about now? Okay, we got music now. My God, I don't like the gloomy nature of this music. It's usually more upbeat. Uh-oh. Is it a sign of things to come? Thank you, everybody, for joining us. We will be listening to the earnings call together here. We're just waiting for the folks at Tesla to go live. Actually, what I'm going to do is I'm going to share the tab, so then that way we don't have feedback in case people want to add their commentary. Please do confirm you can hear the music. Yes? Okay, perfect. So once they go live, we'll share the discussion, obviously. And then after the call, we will also have commentary. We'll be taking notes from the call as well. We'll be sharing those notes with you. And once they wrap up, we'll have a post-call discussion where all of us, whoever's left, whoever survives the next hour of God knows what will come up, we'll have a discussion on what we heard. We'll go through our notes, and then we'll see what ends up, where we end up. So, okay, let's do a quick poll: thumbs up or thumbs down? Thumbs up, good tone. Thumbs down, bad tone. What will be the tone of this call? Okay. All right. We have a little bit of everything. Okay. Nick and I copped out here, which is smart. Okay. Any last words before the call starts from the panel?
No more boneheaded questions. I want to hear something like that.
Well, if you hear something like that, the stock will be down 20%.
I want to hear when AI day is.
Do we think we'll hear Compact on the call?
I don't think we'll hear anything product related because he's going to do another speech in a week, remember, after the 10K. So I think any question on products will be, no, I'm going to tell that in a couple of days.
Okay. That's fair. In the comments section below, let us know what you expect from this call. Look, we're already getting thumbs up here. So we got a lot of thumbs up. We got a Shaka. Nice. Thumbs up, thumbs down. Thumbs up. Okay. We're kind of mixed. People are expecting different things here are happening. Okay, we're just waiting for the call here. Everybody that's joining us, it's usually they're on time. They're about 3 minutes late, so maybe they're hooking up their super improved audio gear, hopefully, for this call, if they have one. But we'll see what happens there. By the way, between all the different broadcasts, we have 8,300 people listening in live.
Wow.
8,300. We've been somewhere between 7,000 and 8,000 for most of the call.
When is there going to be some kind of software that lets you combine this into like a Twitter Spaces? So it's on Twitter Spaces, even if you don't have Twitter Spaces interaction. At least people who are
It
watching
is.
X or
Herbert's
whatever.
is streaming
It
it
is.
on Twitter.
Yeah,
Oh, I
we're
didn't know
live
he's
on.
streaming it.
Welcome to Tesla's
Yeah.
fourth
All right, we're live.
Q&A
Here we go.
webcast. My name is Martin
Mute, please.
Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So the Tesla team did an incredible job in 2023. We achieved record production and deliveries of over 1.8 million vehicles, in line with our official guidance. And in Q4, we're producing vehicles at an annualized run rate of almost 2 million cars a year. This was really a phenomenal achievement. Looking at just the Fremont factory alone, we made 560,000 cars. This is a record. In fact, it's the highest output automotive plant in North America. And people are often surprised that the highest output car factory in North America is in the San Francisco Bay Area. It's a little counterintuitive, perhaps. And it's really had an incredibly positive impact on that entire area. What would have been a rundown strip mall is the highest productivity car plant in the Americas. Think about that. It was derelict when we got it, and now it's the most productive plant in this entire part of the world. And it's enriched the community in so many different ways. It's really a gem. So I'm super proud of the people that work there. Model Y became the best-selling vehicle globally, as predicted. The best-selling vehicle of any kind, not just electric vehicles, with over 1.2 million units delivered. The energy storage business delivered nearly 15 gigawatt hours of batteries in 2023 compared to 6.5 gigawatt hours the year before. So tremendous year-over-year growth, triple digits. Yeah, I think we'll continue to see very strong growth in storage. As predicted, I said for many years that the storage business would grow much faster than the car business, and it is doing that. Free cash flow remains strong at $4.4 billion in 2023, in spite of record spending on future projects. So we had record capex expenses as well as record R&D. This brings us to 2024. There's a lot to look forward to in 2024. Tesla is currently between two major growth waves. We're focused on making sure that our next growth wave, driven by next-gen vehicle, energy storage, full self-driving, and other projects, is executed as well as possible. For full self-driving, we've released version 12, which is a complete architectural rewrite compared to prior versions. This is end-to-end artificial intelligence. So another bit nets, basically photons in and controls out. And it really is quite a profound difference. This is currently just with employees and a few customers, but we will be rolling out to all customers in the US who request full self-driving in the weeks to come. That's over 400,000 vehicles in North America. So this is the first time AI is being used not just for object perception, but for path planning and vehicle controls. We replaced 330,000 lines of C++ code with neural nets. It's really quite remarkable. Sort of as a side note, I think Tesla is probably the most efficient company in the world for AI inference. Out of necessity, we've actually had to be extremely good at getting the most out of hardware, because hardware 3 at this point is several years old. So I think we're quite far ahead of any other company in the world in terms of AI inference efficiency, which is going to be a very important metric in the future in many arenas. So, see, the new Model 3 is now available globally. So we did an updated Model 3. While the car looks similar, a lot of work has gone into the vehicle to make it better in every way. It is significantly quieter, more refined, better equipped, has longer range, and many other improvements. And I recommend taking it for a test drive. If you have not driven a Model 3 in a long time, you should really try the new one. So steady improvements. And we're very far along on our next generation low-cost vehicle. This is an earnings call, not a product announcement. So there'll no doubt be many questions that try to ask us about new products coming, but we reserve product announcements for product announcements, not earnings calls. So, but we're very excited about this, and this is really going to be profound, not just in its design of the vehicle itself, but in the design of the manufacturing system. This is a revolutionary manufacturing system, significant, far more advanced than any other automotive manufacturing system in the world, like by a significant margin. Several years ago, I said perhaps the most important competitive characteristic of Tesla in the future will be manufacturing technology, and you will really see that come to bear with our next-gen vehicle. The first manufacturing location for this will be at our Gigafactory and headquarters in Austin, Texas. And then we'll follow that up with other locations around the world. Probably the factory we'll build in Mexico will be second, and then we'll be looking to identify a third location, perhaps by the end of this year or early next, outside of North America. So, in conclusion, we had a great year with record production, record deliveries, and a strong free cash flow in spite of a very high interest rate environment. And we are focused on exciting new projects that will, I think, ultimately, if we execute on all these things, and it is very hard to do all these things, it's not a sure thing, but I do see a path where Tesla could one day be the most valuable company in the world. I do want to emphasize that is not an easy path and a very difficult one, but it is now in the set of possible outcomes. And previously, I would not have thought it is in the set of possible outcomes. So, thank you again to all of our investors, our employees, and our suppliers for a strong year, and looking forward to a great 2024 and years to come. Thank you.
Thank you. And our CFO, Vaibhav, have some opening remarks as well.
Thanks, Martin. Good afternoon, everyone. As Elon mentioned, we had a record year in terms of both production and deliveries for our auto business, as well as record deployments in our energy business. This was achieved despite 2023 being a challenging year in terms of higher interest rates and higher inflation. Big thanks to our customer for being with us through this challenging period. I would also like to thank the whole Tesla team for their resolve and dedication throughout. In terms of 2023 financials, we ended the year with over 96 billion of revenue and generated 4.4 billion of free cash flow to end the year with over 29 billion of cash and investments on hand. Our 2023 GAAP net income was impacted by the recognition of one-time non-cash benefit of 5.9 billion from the release of valuation allowance on certain deferred tax assets. This was due to our recent history of sustained profitability and is similar to several other companies who have recently gone through a similar change in their accounting. Accordingly, starting with Q1, our book tax rate will now be more in line with other companies in the S&P 500. In our vehicle business, we continue to see improvements in our per unit cost despite us being in the early phase of Cybertruck ramp. As a result, our auto gross margin improved sequentially. That said, predicting auto gross margins is extremely challenging since there are many moving parts to this equation, some of which are out of our control, like the change in tariffs or local incentives, to name a few. While the teams are focused on cost reductions, we are approaching the limits within our current platforms. On the demand front, as promised, we made investments in digital campaigns in 2023. We fully appreciate the importance of customer education, as we are still in a customer acquisition phase. Our data suggests that around 90% of our vehicle buyers in 2023 never owned a Tesla before. We are being creative in figuring out ways to bring in new customers and educate them about the benefits of owning a Tesla versus gas-powered vehicles. The key among them being total cost of ownership. This concept is mostly overlooked for just the upfront cost. We will be rigorous in evaluating our campaigns, curating the content, and optimizing spend accordingly to support the overall demand. There are two additional things I would like to mention as it relates to the US market. First, for customers who qualify for the IRA buyer credit, we now offer that as a point of sale benefit for Model Y, which means an immediate reduction of $7,500 at the time of purchase to the end customer. Secondly, we continue to offer very attractive lease rates for Model 3 and Y using our partner leasing program. Note that the sales under this program are recognized as upfront revenue and reported within automotive sales. Our energy storage business had another record year with deployments more than doubling and revenues increasing by more than 50%. This business is poised to again surpass our auto business in terms of growth rate in 2024. This has been in the works for quite some time, with us laying the foundation a few years back by building our mega factory in Lathrop. I would like to thank the whole Tesla Energy team for their efforts to make this a reality. Our services and others business also started contributing meaningfully to our results and our fleets as our fleet goes, as we expect the fleet-based revenues from supercharging, used cars, and services to continue to increase. For 2024, our focus is to continue growing our output, continuing our cost reduction efforts, and increasing investments in our future growth initiatives. Accordingly, we are currently expecting our capital expenditure for 2024 to be in excess of $10 billion. We believe this would be critical in helping us lay the foundation for the next phase of growth. Once again, I would like to thank everybody at Tesla, our investors, and our suppliers for being with us in this journey. We can open it up to questions, Martin.
Thank you. Let's go through investor questions. Question number one is from Michael. Given that you moved the start of the next generation compact vehicle production to Austin, has the timeline improved so that we might see the next generation platform vehicles in 2025?
I mean, I want certainly say things with they should be taken with a grain of salt. Since I'm often optimistic, with I don't want to blow your minds, but I'm often optimistic regarding time. But our current schedule says that we will start production towards the end of 2025, so sometime in the second half. That's just what our current schedule says. That there's a lot of new technology, like a tremendous amount of new revolutionary manufacturing technology here. The reason I want to put this new revolutionary manufacturing line at Giga Texas was because we really need the engineers to be living on the line. This is not sort of a off the shelf, just works type of thing. It's just a lot easier for Tesla engineering to live on the line if it's in Austin versus elsewhere. So, but we are currently expecting to start production second half next year. That will be a challenging production ramp. Like I can emphasize, we'll be sleeping on the line practically. In fact, not practically, we will be. But I am confident that once it is going, it will be head and shoulders above any other manufacturing technology that exists anywhere in the world. It's next level. So it's always difficult to predict what that S-curve of manufacturing looks like. So it always starts off real slow, and then it grows exponentially. And predicting that intermediate S-curve is difficult, but so I don't know. It's hard to say what the unit volume would be next year. We're not going to make any predictions on that front, but it does seem quite likely that we will start production next year.
Thank you. The next question is from Michael again. What has been the barrier to ramping 4680 cells into multi-million cells per week rate? And when do you expect to get there? Drew?
Yeah, first, I just want to allay any concerns regarding 4680 limiting the Cybertruck ramp, because I've seen some people commenting about that. To date, 4680 production is ahead of the ramp with actually weeks of finished cell inventory. And the goal is to keep it that way, not only for Cyber, but for our future vehicle programs. And as Elon said, it is an S-curve here too. Like it's hard to predict these things, but I'm just describing our goals.
It's a hard problem. Like,
yeah,
there are entire companies where all they do is make battery cells. That's like all they do.
Indeed,
Okay.
indeed.
We do a lot of other things,
Um,
and we got a lot of breakthrough technologies that take time to figure out with 46. It's not just that it's a 46 millimeter diameter by 80 millimeter full cell. That's just the diameter. That's just the dimensions.
Mhm.
There's a tremendous amount of new technology in the cell itself.
and manufacturing
And
technology.
yes, exactly.
And just regarding what the team was able to do in Q4, Texas successfully swapped line 1 from the Model Y design of the cell to the Cybertruck design of the cell, which was the 10% cell energy increase I've mentioned before. And as with any major new product introduction, the factory and engineering teams collaborated to ensure quality of the new design and the process changes as their first priority. And now our focus returns to cost and production ramp in Q1. In terms of what we're doing, we're currently running 1 production line, 1 assembly line, using 2 assembly lines in addition for yield and rate improvement trials. And we have a 4th in commissioning, and 4 more will be installed starting in Q3 this year. So definitely this is a big year for ramping 4680.
But we also do want to emphasize that we also expect to ramp orders from our suppliers.
Yep.
So this is not about replacing our suppliers; it's about supplementing our suppliers.
Yes.
So we are very appreciative of our suppliers. Panasonic obviously is our longest supplier. They're an amazing company. We've got CATL, we've got LG, and BYD. Yeah.
Thank you. The next question is from Adam. Should retail shareholders be concerned that Elon has stated that he's uncomfortable expanding AI and robotics at Tesla if he doesn't have 25% of voting?
Yeah, I guess let me explain what my concern is here, which is that I see a path to creating an artificial intelligence and robotics juggernaut of truly immense capability and power. And my concern would be, I don't want to control it, but if I have so little influence over the company at that stage that I could sort of be voted out by some sort of random shareholder advisory firm. We've had a lot of challenges with institutional shareholder services, ISS, I call them ISIS, and Glass Lewis, which there's a lot of activists that basically infiltrate those organizations and have, strange ideas about what should be done. So, so I want to have enough to be influential. Like if we could do a dual class stock, that would be ideal. I'm not looking for additional economics. I just want to be an effective steward of very powerful technology. The reason I just sort of roughly picked approximately 25% was that's not so much that I can control the company, even if I go bonkers. And if I'm like mad, then they can throw me out. But it's enough that I have a strong influence. That's what I'm aiming for, is a strong influence, but not control. There's some way to achieve that. That would be great.
Thank you. The next question is, what is your expectation for automotive gross margin ex regulatory credits for the full year?
Like I said in my opening remarks, we're focused on reducing the cost of our vehicles. This is very extensive and involved exercise whereby we look at not just the component cost but down to the packaging used to get the materials to the production floor. Each element of the cost is scrutinized to optimize further. A few pennies saved at the subcomponent level, whether through engineering redesign or from many other things which I mentioned, leads to cost reduction. This is a constant exercise, and we just have to chase down every penny possible. We have a strong team which is hyper-focused on this. However, this is a very difficult thing to predict precisely because there are a lot.
We don't know. We don't have a crystal ball, so it's difficult for us to predict this with precision. If the interest rates come down quickly, I think margins will be good, and if they don't come down quickly, they won't be that good. Yeah. It's always important to remember that the vast majority of people buying a car is about the monthly payment. It's not that people don't want. We have tons of we have lots of people who want to buy a car but simply cannot afford it. And that as interest rates drop and that monthly payment drops, then they're able to afford it and they buy the car. It's pretty straightforward, and there are no tricks around to get around this.
Okay, thank you. The next question is, does the company anticipate 50% volume CAGR to be realized in either 2024 or 2025? If not, why not?
As we have said in our prior guidance, there will be periods where we won't be growing at the same rate as before. We are between two major growth waves. The first one began with the global expansion of Model 3 and Y. And we believe the next one will be initiated with the next generation platform. In 2024, our volume growth will be lower, as we have said, because we're trying to focus the team on the launch of the next generation vehicle.
All right. Thank you very much. The next question is from Michael. When will Tesla start construction on the Giga Nevada expansion and Giga Mexico? And when can we expect each of these to produce their first products, such as 4680 cells, Semi, and the next-gen vehicles?
We have recently broken ground for the next phase of Giga Nevada expansion to incorporate Semi and other projects. But as said earlier, as regarding Mexico, we want to first demonstrate success with the next generation platform in Austin before we start construction. Therefore, we have started the long lead work to get the basics ready and plan to follow our recipe from the 3Y ramp with Shanghai, where we started with learnings from Fremont and ramped really quickly.
Yeah, exactly. It's important to emphasize that, Model 3 production was 3 years of hell. Honestly, before some of the worst years of my life, frankly. I still have mental scar tissue from those 3 years, as do many. But then Model Y was somewhat of a variant on Model 3, so a much easier situation. And then we were able to actually do slightly improved versions of, in some cases, significantly improved versions of the Model Y production line in Shanghai and Berlin. And that's the right. I think the sensible way to go about things is kind of figure out the core technology of the manufacturing line and then replicate it with improvements throughout the world. So.
Thank you. The next question from Michael is, has there been any progress made with an FSD licensing agreement with another company?
I really think lots of car companies should be asking for FSD licenses, but and we've had some tentative conversations, but I think they don't believe it's real quite yet. I think that will become obvious probably this year. And I do want to emphasize that if I were CEO of another car company, I would definitely be calling Tesla and asking to license Tesla full self-driving technology. It's definitely the smart move.
Thank you. The next question from Siddharth. What is the timeline for Optimus' first production of a volume production line, and what are the barriers to getting there?
Optimus obviously is a very new product, an extremely revolutionary product, and something that I think has the potential to far exceed the value of everything else that Tesla combined. And when you think of an economy is productivity per capita times capita. But what if there's no limit to capita? There's no limit to the economy. And the technologies the AI technologies we've developed for the car translate quite well to a humanoid robot, because the car is just a robot on four wheels. Tesla is arguably already the biggest robot maker in the world. It's just a four-wheeled robot. So Optimus is a robot with a humanoid robot with arms and legs. It's by far the most sophisticated humanoid robot that's being developed anywhere in the world. I think we've got a good chance of shipping some number of Optimus units next year. But like I said, this is a brand new product. A lot of uncertainty is when there's a lot of uncertainty in your uncharted territory. It's obviously impossible to make a precise prediction. But we will be updating the public with progress on Optimus, every few months, and you can see that it's advancing very quickly. I was just in the Optimus lab actually until late last night, until like midnight or something. And finally left the Optimus lab. The team's doing amazing work. That's obviously a case where we want to make sure that Optimus is safe, especially at scale, and that it should be impossible for any centralized control to upload malware to a humanoid robot. So we're going to want to build in localized shutoff that cannot be updated from from a central server. That's a case where we really have to give extreme thought to safety. But like I said, I do think it has the potential to be the most valuable product of any kind ever, by far.
Just to comment on the barrier, I think the barrier, and we've talked about this, is like getting it to actually do something useful. Like we can get it to walk around, we can get it to do things, but it's like that utility part.
You can already do some useful things.
But
yeah,
to making millions of these things, it's like utility. Got to get the utility up.
Yeah. A smart robot that can do that's capable of doing generalized tasks is what it will be.
Yeah.
And in terms of doing, moderately specialized tasks, well, it can already do that, and it'll just get better through the course of the year. As we improve the technology in the car, we improve the technology in Optimus at the same time. It runs the same AI inference computer that's on the car. Same training technology. We're really building the future. The Optimus lab looks like the set of Westworld. But admittedly, that was not a super utopian situation.
Yeah, not the best reference.
Yeah, the creators of Westworld, Jonah Nolan, Lisa Joy Nolan, old friends of mine actually, and I invited them to come see the lab. I think they'll come see it hopefully soon. It's pretty wild, especially the sort of subsystem test stands where you've just got like one leg on a test stand, just doing repetitive exercises, and one arm on a test stand. Pretty wild. Yeah.
We're not entering Westworld anytime soon.
Right. Well, and take safety very, very seriously.
Thank you. The next question from Nermin is, how many Cybertruck orders are in the queue, and when do you anticipate to be able to fulfill existing orders?
First of all, I want to thank all the Cybertruck reservation holders for their patience. The reservation to order conversion rate so far has been very, very encouraging. If the trend continues, as it's very likely to be, we will soon sort out all the builds in 2024. And also, we have new orders coming after the launch. The order numbers keep growing. So we're now all hands on deck focused on ramping, so we can fulfill all the demands in a reduced wait time.
Yeah, it's important to emphasize that this is very much a production constrained situation, not a demand constrained situation. And we, obviously, we could dramatically raise the price, but that doesn't feel right to us to sort of gouge people for for early delivery. But really the demand is off the hook. As long as the price is affordable, I mean, I see us ultimately delivering on the order of something like 250,000 Cybertrucks a year in North America, but maybe more, but give or take, roughly on that time frame. And it sure is a head turner.
Definitely is.
Yeah.
Anywhere you go, people look at you.
Yeah.
They give you thumbs up.
Yeah, it's like finally the future looks like the future. Yep. For the other trucks on the road there, and there's some very good trucks on the road, but if you were to switch out the brand name, you wouldn't hardly know which company made them, but you definitely would know the Cybertruck. That's our best product ever.
All right, thank you. The next question is, can we get Tesla energy volumes reported in the production and delivery release?
Yeah, we will strive to do so starting from this quarter. And just a brief update from the business perspective. Megapack continues to see strong demand signals globally, driving consistent growth trajectory through 24 and 25. We want to thank all of our partners who've put their trust in the Megapack team to execute on critical infrastructure around the world. And I would like to personally thank the Megapack engineering and production teams for their strong 2023 execution. Lathrop continues to ramp through 2024 with the operation of a second final assembly line to double capacity from 20 to 40 gigawatt hours by the end of the year.
Thank you. And the last investor question is from Siddharth. What are the preliminary results on return on investment of your ads and education campaign? Given that many people still lack awareness that Tesla average price is less than the average non-luxury car price of $45,000, will you expand educational ads?
As Elon mentioned, the ultimate solution to increase EV adoption is really address the affordability issue. But at the same time, we do aware there's an awareness issue as well. So in Q4, we ran a series of digital campaigns, very targeted digital campaigns across different geos and different channels. The target of these tests is really just to drive awareness and ultimately measure the return of investment on those digital channels. And the messaging we're driving is really focused on our product and also try to address some of the misconception of the EV, such as safety, affordability. In one particular awareness campaign we run in Texas, we reached the audience about 10 million unique viewers and generated close to 500,000 visits to our website. A large number of these viewers are first-time visitors to our site. The traffic through these digital channels actually behaved very similar to those organic traffic come to our website. So going forward, we're just going to keep exploring different channels and doing our trials to get a better understanding of this effectiveness of these digital campaigns.
Yeah, but I would also like to caution that we'll be very careful that we don't want to overspend on this side. We want to make sure people are aware, but that's where we'll keep tweaking our methodology about how and where we spend the money, because we understand the importance of increasing awareness, but at the same token, we don't want to spend a lot of money on just creating awareness.
Yeah, there are some geographies where our market share is remarkably low, like Japan, for example. Now, we also need to make sure that we have superchargers in the right locations and the service centers are there and the product works well in Japan. But Japan is the third largest car market in the world of any country. So And we should at least have a market share proportionate to, say, other non-Japanese car makers like Mercedes or BMW, which we do not currently have. So I think that's the case. And when I talk to friends of mine in Japan, they're like, there is like quite a lack of awareness of Tesla. So that's the case where we definitely need to increase awareness in countries and regions where there is not that much awareness.
Thank you. Let's go to analyst questions. The first question comes from Pierre Ferragu from New Street Research. Pierre, go ahead, please. Feel free to unmute. Pierre, can you hear us?
Okay. Well, it's really tough to find the unmute button on Teams, guys. I'm sorry for being late. So yes, my question would be, on like the cost reduction. You've talked about it already a lot, and if I look at it over the last like 5-6 quarters on average, the COGS per car has been coming down like more than 2% sequentially on average. So that means you're like on a trajectory of COGS per car going down 10% a year. So that's probably like unheard of in the auto industry. I don't think any car manufacturer ever achieved that. But that's very, very mundane and it's a good performance, but it's a very normal performance in a lot of other manufacturing industry like microelectronics or consumer electronics. And so I'd love to hear your thoughts about whether you consider yourself closer to the latter, to like a microelectronics business where you have this ability to actually always improve cost, you have more control on how things are pulled together into your fabs, and you see yourself sustainably taking costs down with that kind of pace, or do you think your ability to take down cost is actually going to become more like in line with the rest in the industry over time?
Yeah, I think I've covered this in a pretty lengthy detail, even in my opening remarks and in a previous question. But to just further clarify, we are constantly looking for what we can do to reduce costs. And like I said, it's a game of pennies. We've talked about it before as well. And the team is constantly going and checking where can we reduce the cost further. And do I believe that we will have the same pace which you've seen over the past few years? Probably not, because remember, we were coming out with a period wherein commodity prices were rising. So then we did see benefits coming from that. So those are more or less, taken care of. But there is more which we're still chasing. And, I would say a big kudos goes to the team out here at Tesla, both the engineering team as well as the supply chain team, because every time we give them a challenge, they go gangbusters to try and figure out whatever they can to take out further cost. But yes, I would want to caution that do not project the previous cost reduction at the same pace completely in the future, because with our current platform, we are getting to a place wherein, there are limitations.
Yeah, the increased scale also sort of helps us there. As we introduce new products, we have the opportunity to go renegotiate existing suppliers for better pricing. We're looking at every penny, like Vaibhav and Elon mentioned. Just to give you an example, our inbound logistics cost has come down by 22% year over year. And this is because of optimization on using returnable packaging as opposed to cardboard, which is even better for the environment. Optimizing trucking routes, negotiating better pricing with shipping companies, with trucking companies, going with full truckloads, and just doing that sort of. The bigger we become, the more we put thought into these things, and the more efficient we become as a result of it. So those work streams are going to continue.
And we're also getting into the tiers of supply chain to see if there are opportunities.
Yeah,
getting into the tier 2s, tier 3, tier 4 levels, and then negotiate those pricing as well to get more efficiency out of the system.
And then on the design side, we're not static, right? Like especially in areas where the technology is still improving rapidly. Power electronics is a great example. You know, we continue to bring improvements there that are like fundamentals, sort of driven from the device up, that result in cost reductions generation over generation, and they don't only go into the new vehicles; they come to the old vehicles as well. So that's closer to what you were talking about with like the microelectronics space. Some of that exists in the vehicle.
Yeah, certainly our car is more computer than car in many ways, and has a lot of new tech over the last 100 years of automotive production that everyone trying to scrape pennies from.
We have a crazy amount of compute in our cars compared to anyone else.
Yes.
It's like orders of magnitude.
And we get to ride that down, right?
Maybe 1,000 times more. I don't know, some nutty number.
I mean, like if I just look at the main microcontroller that makes the motor go, for example, like when I think about what it cost when we stuck it in a Roadster in 2006, and what it costs now, I mean, it's like there's no comparison.
Yeah.
You know, so we've definitely been riding that electronics cost wave.
Yeah.
And then even on the like what you call traditional vehicle side, we do things that no other automakers do to bring costs down through breaking down, you know, the way structures are built and, you know, the way we put our cars together. And I think that mindset that we have is very much closer to the micro processor or power electronics industry than the automotive industry.
Thank you. Pierre, do you have a follow-up?
Great. Yes, a quick one. It's you know, you mentioned this like phase in which you are between two big growth periods. I'd love to hear you about, you know, what you consider the size of your addressable market with the portfolio you have today, like the 3, the Y, the X, and the S. What's your estimate of your addressable market? You're shipping like probably about like a 2 million unit run rate today. And given the price points of these cars, what kind of market share of what you address with these cars do you think you've already achieved today?
I don't know if anybody. I actually don't think we have a firm.
Yeah, I'm like
idea of this. It's hard to say exactly.
Yeah, I won't say there's. I mean, one way to think about it is look at the automotive industry as well. You know, EVs still contribute a very small market share. So yes, our goal is to try and take as much market share out of that pie. But you know, do I have a specific number to give you? I don't think we can say that with certainty.
And it's a growing pie as well.
Exactly.
It's 9% today, but it could be 20% in a couple of years or in the future.
Yeah.
And certainly, like the way we've looked at it, and we've always said this, it's not about how many EVs you can sell, it's how many great cars you can sell, how many vehicles you can sell. And that market's, you know, 100 million a year. And, you know, we're barely 2% of that. I still think there's 98% more to get. You know,
Yeah, I mean, it's worth noting that if you look at, say, the average selling price of the other top-selling vehicles in the world, they are much lower priced than a Model Y.
Yeah.
So like a Toyota RAV4 or Corolla, Honda Civic, you know, that kind of thing, they're much lower priced than ours. So people are really stretching their wallets to be able to afford a Tesla. It's quite a difficult thing for them to do, and remarkable that it's the best-selling car in unit volume, despite being much more expensive than other high-volume cars.
Thank you. Let's go to the next analyst. The next question comes from Adam Jonas from Morgan Stanley.
Hey, everybody. So I can't wait to see the Optimus lab. I'm sure everybody on this call feels the same way. Your last AI day, Elon, was September 2022. Can we expect a Tesla AI day this year? It seems like a lot's changed in that realm. And is this year the time?
Yeah, it's a good question. We have found that when we do these AI days, some of our competitors literally look at what we do on a frame-by-frame basis.
They do.
And then we find these things being copied.
Same thing with Battery Day.
Same thing with Battery Day. So we have to be a little cautious about, revealing the exact recipe of the secret sauce. But I think some kind of update would be good to do. I'll talk it over with the team, and I think we might do something later this year. Our main goal with these AI Day things is recruiting. So
yes,
and to sort of change the perception of Tesla as people thinking of Tesla as a car company when they should be thinking of Tesla as an AI robotics company.
Mm-hmm. Maybe as a follow-up, Elon, I'd love your thoughts on the topic of China-based OEMs expanding into Western markets as the China market kind of gets saturated and there's a tremendous growth in the supply. How much success should Tesla investors allow for this competition to achieve in Western markets? And can you envision a scenario where Tesla could partner with a Chinese OEM to help accelerate sustainable transport in markets like Europe and the United States? Thanks.
Well, our observation is generally that the Chinese car companies are the most competitive car companies in the world. So I think they will have significant success outside of China, depending on what kind of tariffs or trade barriers are established. Frankly, I think if there are not trade barriers established, they will pretty much demolish most other car companies in the world. So they're extremely good. We don't see an obvious opportunity to partner. Certainly we're happy to, except on the supercharger front, we're obviously happy to give any electric car company access to our supercharger network. We're also happy to license full self-driving, perhaps license other technologies, and anything that could be helpful in advancing the sustainable energy revolution.
Thank you. And the next question comes from Dan Levi from Barclays.
Hi, good evening. Thank you for taking the questions. First, I'm wondering if you can just walk through some of the gating factors required to unlock your next-gen platform. You talked about a number of cost initiatives back at the Investor Day a year ago, things in manufacturing and powertrain. Maybe you can just give us a sense of where these initiatives stand. And do you believe it? We know that there's a number of new features and technologies in Cybertruck, things like 48-volt architecture, and really employing your 4680 batteries. To what extent do you think Cybertruck is really a proving ground for the next-gen platform and is really going to be a gating factor to unlocking the cost reductions needed for the next-gen platform?
Yeah, I don't think that anything on Cybertruck should be considered gating for the next gen platform. We're obviously doing a lot of manufacturing innovation, as Elon said, for a next generation vehicle. When you do something at that scale, you have to prove it out. You don't just throw it on the line and just build it. So we're going through those validation phases for all of those new manufacturing technologies now. I'm sure 48 volt was definitely something we wanted to carry forward, and it's something we hope the industry adopts as well. We're also open to partnering on that if everyone wants to do that.
Finally, man, the people that really know that this is like the inside baseball thing, but 48, it's so high time that the auto industry moved from the random number of 12 to 48.
Random number of 48.
Yeah, well, it's much less random.
Slightly less random based on human injury, but
dramatically reduces the amount of copper you need in the vehicle, and and also moving to a sort of higher bandwidth communications, sort of Ethernet level communications versus CAN bus, which is pretty
slow.
So it's really just bringing cars to the
21st century.
Yeah, pretty much.
So like certainly like
it's not exactly, it's like normal for a laptop.
Yeah. Certainly bringing that is an evolution in our architectures of vehicles, but it's not gating by any means. The gating work is just to finish the design and manufacturing of the car, test them out, and get them going.
Yeah, I mean, programs in execution mode, right?
Yep.
Right. So it's talking about like tooling lead time, manufacturing
Factory lead
time, factory lead time, and executing those programs.
There's a lot of specialized machines that make the machine for a next gen vehicle. So these are not machines you can just order from anyone. They actually, we have to design a machine that has never existed to build a car in a way that has never existed.
Yeah, so you don't just have like a design validation phase, but you have an equipment design validation phase as well.
It does make it very hard to copy us because you have to copy the machine that makes the machine that makes the machine. So
Talk about tiers.
it's not, yeah, it's like, exactly, manufacturing exception. So, I do think it's quite a powerful, sustainable advantage because there just is no place to go to order the machines that make our next gen car that don't exist.
Great, thank you. As a follow-up, your release does not mention Dojo, so if you could just provide us an update on where Dojo stands and at what point you expect Dojo to be a resource in improving FSD, or do you think that you now have sufficient supply of NVIDIA GPUs needed for the training of the system?
I mean, the AI hardware question is that is a deep one. So we're obviously hedging our bets here with significant orders of NVIDIA GPUs, or GPUs are the wrong word. There really needs to be, there's no, it doesn't even, you can't like produce graphics. So it's not a graphic processing unit, neural net processing unit or something like that. Yeah, GPU is a funny word, like vestigial. So, and a lot of our progress in self-driving is training limited. Something that's important with training, it's much like a human. The more effort you put into training, the less effort you need in inference. So just like a person, if you train in a subject, sort of classic 10,000 hours, the less mental effort it takes to do something. If you remember when you first started to drive, how much of your mental capacity it took to drive, you have to be focused completely on driving. Then after you've been driving for many years, it only takes a little bit of your mind to drive, and you can think about other things and still drive safely. So the more training you do, the more efficient it is at the inference level. So we do need a lot of training. And we're pursuing the dual path of NVIDIA and Dojo. But I would think of Dojo as a long shot. It's a long shot worth taking because the payoff is potentially very high, but it's not something that is a high probability. It's not like a sure thing at all. It's a high risk, high payoff program. But Dojo is working, and it is doing training jobs. So, and we're scaling it up, and we have plans for Dojo 1.5, Dojo 2, Dojo 3, and whatnot. So, I think it's got potential, but I can't emphasize enough: high risk, high payoff. So, I think it still makes sense given the, even if it's a low probability of success for the very high. I think anyway. I'm belaboring the subject. It's a very interesting program. It has the potential for something special. There's also our inference hardware in the car. So we're now on what's called hardware 4, but it's actually version 2 of the Tesla designed AI inference chip. And we're about to complete design of, the terminology is a bit confusing. We're about to complete design of hardware 5, which is actually version 3 of the Tesla design chip, because the version 1 was Mobileye, version 2 was NVIDIA, and then version 3 was Tesla. So, and we're making gigantic improvements with, from hardware 3 to 4 to 5. I mean, there's a potentially interesting play where when cars are not in use in the future, that the in-car computer can do generalized AI tasks, can run a sort of, GPT-4 or 3 or something like that. if you've got tens of millions of vehicles out there, even in a robotaxi scenario where they're in heavy use, maybe they're used 50 out of 168 hours. That still leaves, well over 100 hours of time available of compute hours. It's possible with the right architectural decisions that Tesla may in the future have more compute than everyone else combined.
Thank you. And the next question comes from Colin Langham from Wells Fargo.
Oh, great. Thanks for taking my questions. As we're thinking about going into 2024, the press release talks about hitting 36,000 or slightly above in Q4. I mean, and the comments of the release talk about approaching the natural limits, and it sounds like you're continuing to try to whittle that away, but that sort of implies there's not much left. In addition, you have the hourly wage increase, I guess, will add to that into next year. And I thought you said raw material costs are that benefit is sort of almost played out. So is there an opportunity to continue to go below the 36, or should we kind of be modeling that it kind of stays at this level into 24?
We are definitely aware of the cost increases which are coming through because of the wage increases. But like I said, we keep looking at other cost opportunities and try and figure out where else can we cut down. So there is definitely more opportunity to bring down costs further. I won't specifically guide to a number which we will try and get to, but there's definitely more opportunity there.
Yeah, we're chasing lots of cost opportunities on the design side still for 2024. North of 8 figures is what we're worth just in my organization, and Lars has got a bunch. And then from a commodities perspective, it's such a long cycle time through the whole material supply chain that even with what we've already seen to this point, there's more to come on commodities reductions.
And there's still some tailwind left on the commodity.
That's what I mean. Yeah.
And aluminum and steel.
Yeah.
And battery materials.
It boggles my mind to think that if we make a 1% improvement in cost, that's $1 billion.
Yeah.
Yeah.
So it's like, on average, if we reduce the cost by 1 penny, $1 billion. What? And we started off, from that long ago, that we're only making like 10 cars a week. Yeah. So where does it lead ultimately? With good execution, like I said, it's not a slam dunk, but with if we execute very well, I think Tesla could be the most valuable company in the world.
Thank you. Colin, do you have a follow-up question?
Yeah, just a quick follow-up. In the commentary, you mentioned the taxes would go to the S&P 500 level. I think you've been trending slightly below 10%. S&P, I think, is typically 25%ish. Is that going to? Should we expect that to jump right up next year when we're modeling next year, or would it be like a gradual change over the next few years? And any cash impact from that tax change as well that we should be considering?
Yeah. So there's no impact on cash taxes from the release of the valuation allowance, which I spoke about. What it does is it's how you account for taxes on your books. So it's basically an accounting change, wherein there are certain jurisdictions, because we had enough NOLs, etc., wherein we didn't have to accrue book taxes. Now that the valuation allowance has been released, and we have recognized deferred tax assets on the books, that means your tax rate immediately goes up.
Okay. I think that's all the time we have for today. Thank you so much for all of your questions, and we'll speak to you again in 3 months. Thank you. Bye-bye.
Thank you.
Okay. And we are alive once more. Okay, can you guys hear me?
Yep.
Yes, sir.
Perfect. Oh my God, why are you? Oh, because I boosted my audio. Jeez. Okay, here we go. All right. So I took notes, but I don't know if anybody wants to maybe go first on this. There's a few interesting things that I highlighted, but who wants to go first?
FSD shipping in a few weeks. That was the one that stuck out to me most right at the outset.
Too loud.
Why are you yelling at me, bro?
FSD
Jesus.
shipping in a few weeks. I didn't
Honestly,
change
that's
anything.
better.
All right, I'll try.
Yeah.
I'll just talk like this the rest of the stream. We'll see how you like that.
Much better.
I mean, yeah, I heard a lot of things. I mean, that's one of the positive things. The rest were a little bit negative, right? So they did not give any guidance at all, which is something I was really hoping that they would. They didn't do that. Dojo conversations seemed like, he just kept repeating, right? That it's a high risk, high reward, but it's going to be, high risk. So it's not yet there's something that they can count on and say it's going to actually happen. It is in production. It is helping, but it's not yet, they're not saying, he's not saying that it's for sure going to be a big deal for them. That was a little bit of a downer there. The bot, he did say that it will have some number of bots by next year. It's a very new product, so he also, was very conservative about that. But and it's always like this. Whenever he says statements like that, everybody just jumps to those clear statements, but then they ignore all the things he keeps saying. Right? How many times did he say that I can see a path for us to become the largest company in the world? He said that, 2 or 3 times. You can't believe the bot lab. That thing's just amazing and brilliant. We've got this potential for, being the largest compute by far with everyone else combined. If you count all the cars, which are already the largest robot company in the world. And if you take their compute in the in-car computer use it while it's not being used. So it is very interesting how, there's these forward-looking statements that gets everybody excited, and yet he's also very conservative about some things. And so at the end of the day, I'm, a little bit more conservative of what I just heard. And those are just a quick update there.
Hans or Mott? Hans,
Mutt.
go ahead. He looks like
yeah,
a
I mean,
mutt.
I picked up on some of the same things. I think that the comment that Drew made about the 4680s being ahead of the Cybertruck ramp is positive, but also maybe should be something people think about the context there, that if their target is really based on the Cybertruck, I think that means that 4680 production, at least out of the Austin Gigafactory, is going to be 100% dedicated to the Cybertruck ramp for the foreseeable future. And so I wouldn't expect Tesla manufactured 4680 cells out of that factory to really contribute to the growth of any other products besides Cybertruck. But it is good to see that they are making solid progress, that they have, plans in the works to expand the number of lines they have going there. And it's good to see them really just continuing the month over month improvements in cell output there. The other thing that I keyed in on was the Optimus really having some volume shipments next year. So be curious to know what Elon thinks of as volume. And I'm assuming that's still going to be internal use only. But it's interesting that kind of coincides with the ramp of the next gen vehicle that he also said second half of 2025, and that it's very possible that the goal is to reach some initial rate of volume production of Optimus to actually supply labor to Giga Mexico or Giga Austin. So that was very interesting as well. The guidance that Elon said, 250,000 year Cybertruck volume, he continues to reiterate that. I continue to think he's absolutely full of crap on that. There's no way that it tops out at 250,000. It's going to be way higher. It was cool to see that we got some color on the advertising and marketing, that they drove so much traffic to the website, and that the actual performance of that traffic once it hit the site was very similar to their organic traffic. And so it's not like they're paying for low quality traffic to the site, but seemed like it was effective. And then, of course, they kind of crapped on that by saying, and we're not going to spend very much money doing this, even though the results seem to be promising. It is nice, though, to know that they have lots of ability to control that locally wherever they want. And so they can, one of the things that Rob Maurer has talked about a lot is demand pockets, and that there are demand pockets both in time, but also by geography. And so it's cool to see that they can use this for targeted mitigation of a demand pocket that they may be seeing in one area for one specific period of time for one specific reason. And so hopefully we continue to see a lot of movement forward on that front. I think those were the main things. The other thing that really piqued my curiosity was the mention of a Dojo 1.5 chip. That's the first time that I'm aware of that we've heard anything about a 1.5 version. He's talked about 2 before, and based on the comments about Dojo overall, it seems to be pretty much tracking with my expectations that NVIDIA still continues to be the workhorse for the overall AI training that they're doing. They are using Dojo, but it is definitely not the thing that they are relying on. And so they're going to continue to develop the Dojo chips. They will hopefully improve the performance and make them much more general. The first version was really aimed at video training and was designed well before all of the breakthroughs that we've seen in AI over the last couple of years with companies like OpenAI that have really shown a new way to train these artificial intelligence models. And so as Tesla works on developing Meat Space GPT, which is the real world version of Chat GPT that takes in data from the real world and outputs actual actions to a robot that are intelligent in a similar way that Chat GPT would be intelligent. Just using the video training architecture that they started out with when they were initially designing Dojo. I mean, I don't even know how many years ago now that the design would have been getting set down in stone for Dojo V1. That whole schema didn't exist yet. And so they definitely have to kind of make some updates to the design. So that's what I'm curious about. What does Dojo 1.5 look like? Is that something where they can actually use a mildly updated version of the Dojo V1 chip to do the type of training that they're actually doing with NVIDIA chips these days? That would be very interesting to know. I don't think we are going to get any information on that until potentially if Elon was correct and we do get an AI day here in the not too distant future, we may hear something about it there. But that's something definitely to watch. But all that said, they are moving forward with NVIDIA chips fast enough to continue to roll out all of the FSD growth that we've seen. They've been able to train V12. Obviously, they're continuing to grow the deployment of Optimus and the quality of the software there. So I don't think that we have to be worried about whether or not the lack of progress on Dojo is putting anything into question for Tesla's AI and robotics future. And Herbert and I have had this discussion pretty extensively. But that said, if the more they can rely on Dojo, the cheaper all of those operations are going to be for them, because Dojo is going to not only cost less to install up front, but Dojo is going to also probably be a lot more energy efficient. And so the overall cost of doing that training is going to be a lot lower if they can use it on Dojo. And then if they can achieve those things simultaneously and they have excess capacity, then they can really sell training as a service and undercut clouds that are using NVIDIA based hardware, because they will have an edge on energy usage and therefore cost. So yeah, those are the reasons that we really pay attention to this area and look at it very closely. What we learned today just basically confirms that there's nothing huge here that's going to be material to the stock right now and just needs to be monitored going forward.
Matt, what's going through your mind?
Yeah, I would say that the call was maybe broadly in line with how I expected it to go. Elon was kind of down some stuff like Dojo, but I don't really view that as a surprise. In fact, he's already said that before. He repeated himself like 5 times that it was high risk, high reward today. But that's not new information. He's said that. I forget when the last time he said it was, but that was not new. So really, there wasn't a whole lot of new information, I thought, on the call. It's interesting. I'm just kind of looking through some of the comments here, and obviously the stock is down, and it's the overall emotion is very negative. But I'm kind of looking at this and saying, yeah, this is like reasonably in line with how I was expecting it. Now maybe the stock even drops further from here, but I'm seeing a lot of people even in the comments just be like, oh, like this stock is garbage, like the glory days are over, it's all over. I'm like, no, like this is just we're in this year 2024 where we're kind of in a building year. We're in between the two waves, and if you believe in this stuff, like I think it's really important to take a step back every once in a while and think about, like, do you actually believe in the thesis of AI and just like the accelerated capabilities that AI in general, take Tesla out of the topic, out of the conversation, is going to have? And then if that's true, like which companies are going to benefit from that? And I think it's very hard to not imagine, or to imagine a scenario where AI really takes off in the way that some of us, kind of technologists and optimists think that it is capable of, and really changing the world. And Tesla doesn't do well in that type of environment. So, I'm a finance nerd. I like to look at the numbers. I'd like to kind of understand where Wall Street is and understand the sentiment. But right now, like, I don't know, things are looking a little maybe too negative in the comments. Don't expect a fast turnaround. Like if you need your money in the next 12 months, yeah, maybe don't go all in on Tesla. But if you're here for the long haul, I don't think there's anything in the call that really changed or altered my thesis in any significant way.
Yeah, I agree with that. For me, it seems like some of the commentary we were having before the call was this is the foundation's being laid for the next growth spurt, and I think what I heard very much aligned with that. Compact car next year, maybe an optimistic next year with quote unquote Optimus first shipments next year, which I was surprised to hear that. But again, fully expect that to not come to fruition. And then their plans around AI with FSD are still going well. They're investing heavily in NVIDIA and H100s. They're not dependent on Dojo to be the breakthrough. It's a bummer. Again, it's a bummer to continue to hear the rhetoric that the Dojo is a long shot bet, even though it was kind of the same rhetoric from the beginning. But still, it's sort of like when I'm used to Tesla investing in a new technology, and that new technology sort of being the thing that drives it more often than not. And it could be, the worst case scenario is Tesla doesn't solve FSD with Dojo, they solve FSD with NVIDIA H100s. Whoop-de-doo. Who cares, right? Big deal at that point. So yeah, I am also, I think the negative sentiment in the comments, everybody, obviously I love the open discussion in the comments section, but I do think if you're a long-term investor, there was absolutely nothing about this call and earnings, in my opinion, that would instill some sort of like fundamental fear in the story. It's just like, okay, it's not growing as fast as some people would like, as I would like in 2024. It is what it is. They're laying out the groundwork. From a execution standpoint in the past, when it comes to these giant projects, these sort of next legs, like when they built the Model S versus the Roadster, when they built the Model 3 versus the Model S, when they built the Model Y to take the company to the next level, they've executed all their big goals, and now they have that. They have the compact car plus FSD plus the bot. Now they have 3 giant ones that are coming to fruition. So, yeah, I think fine call. I expected more negativity, and I didn't really get it. It was more like it just felt a little bit more even than other calls, I would say. Alexandra, what's your thoughts?
Hi. So the 3 negatives were nobody on the horizon for FSD licensing. Now, I'm really surprised how they Oh, I'm sorry. Is my stream really bad? I've closed everything else. I'm sorry.
You came back.
But I really,
You
know,
came-
that's okay. Perfect. Sorry about that. So I'm really actually surprised by these OEMs, right? I mean, they don't see it. They obviously don't want to throw money at it, and so that's going to be delayed. But it's a bummer because last year we thought there was somebody in the pipeline. Dojo is obviously not building as quickly as he wanted. It's still on the way. The team has been changed. The bet is getting riskier. I mean, I know he said that before, but I had the feeling Dojo was more on a, AI day 2 gave me a really good stomach feeling. I don't have that anymore. And obviously this lack of guidance. So that's what they're going to hammer us with the next couple of days. I think the stock can go quite below 200 now. So somebody wants to buy, this is certainly a good opportunity. I mean, I can't understand how people can buy these other Mac 5s at the levels they are and spit on Tesla, but that's what happens, right? People just love to buy stock at high prices and don't see it when it's down. For me, the long-term investment thesis is completely unchanged. I see Tesla executing on cars, on energy, and on bots, and people still don't understand that actually FSD is not only the key to full self-drive for the car, but also to the bot. That is the element that lots of other people are missing. The whole experience, the whole year-long experience that Tesla has on that field. Found it interesting that he felt that both Battery Days and IA Day gave too much information to competitors, which also recognizes that there are competitors. Remember, a year or two ago, the second one was so far away you couldn't even see him. Well, now suddenly people are stealing information, so that sort of changed the tone. But I mean, it didn't bother me to put my all-in investment thesis in question. So I fair enough. It's going to be with some delays. It's going to be choppy. Was it ever a smooth ride? And I consider the next couple of weeks good buying opportunities.
Thank you for that. Jeff, let me bring you here for a second, but this is off topic, but I have to do it because I know people that follow me. Jim Harbaugh is going to the LA Chargers. So he's leaving Michigan. So FYI. Okay, let's go, Jeff. Ha in your face, Matt. You look so sad. You only got one national championship. Oh, go ahead, Jeff.
Not to mention the Lions are poised in great position to go to the Super Bowl for the first time like ever. So
I'm pulling for them. Gotcha.
Yeah, as a Bears fan, I think a lot of us wanted to see him. There's a lot of rumors coming to the Bears. Yeah, so on the earnings call, definitely pros and cons. I do think the overall tone of the call was more positive compared to prior calls. I don't think there was any kind of doom and gloom takeaway from the call. I think they're being careful, and I think they're being appropriate in terms of some of their guidance. Obviously, the reason it's hard to prescribe one reason or another, but obviously not giving a formal guidance on volumes can be an issue. I thought the first couple of answers on COGS and gross margin weren't good. They didn't serve the actual performance of COGS and gross margin, which were exceptional, industry leading when it comes to the COGS decline. But then when Karn, Roshan, who both lead kind of halves of the supply chain, and Lars and Drew weighed in, that you heard it just flowed in terms of like what they're doing to take COGS down and what kind of confidence they have going forward. Of course, it doesn't continue in perpetuity, but it sounds like they have a lot of ideas, and those are in the event-driven camp, which were you make a change, you roll it into production. They have industry-leading inventory, so they can roll it in pretty quickly. So I like the real answers on COGS that were given. I think they came in for the save. I thought the first couple of answers were just kind of like, I don't want to answer the question. And so I think the real question there is, are you going to do your pricing reductions in line with your COGS reductions? I think that was I think I asked that question. I think that's the more appropriate thing and they may have said, hey, we don't have a crystal ball. We don't know. But I do think that they kind of answered that question really well. In the end, I felt very good about that. The 4680 thing, not gating Cybertruck, to me, that's that's good for Cybertruck, but that's the answer you want to hear is like, we're not gating anything, and we're starting to kind of really go up the S curve. I thought there were some good answers, but I think, really want to understand, where they're at on that. Talked about demand on the Cybertruck, and the CapEx going north of 10 billion. This is a company that is spending for the future. I found that to be, and then they had record CapEx and record R&D in the past. So the way I see this, moving forward is I do think there's a hit. If you don't guide, I think there's a bit of a hit. But this also could be like, hey, we're kind of drawing a line in the sand. We think we're going to grow probably faster than any other automaker, right? In terms of definitely in the Western Hemisphere, maybe overall in terms of the major automakers. So growth in line with that. And, I think they've sort of steadied the ship as it comes to gross margins. And now we're kind of, it depends what your time horizon is. It's not a very long time horizon to get to this next vehicle. I thought the answer of the second half is in line with what these kind of leak communications are talking about, which was suppliers ready to go in the middle part of the year. So those are some of my takeaways. They had some really good specifics on what they're doing with COGS. They just jumped in and started flowing. I thought that was great. But again, I think short term you gets hit a little bit without the guidance, but you can also kind of view it as like, was this the line in the sand? Like, is there any more, bad news out there? Or was this as bad as it can get?
Any other thoughts from the call that y'all would like to bring up?
Yeah, the only thing I wanted to maybe add is like the dojo, that seems like such bad news, but in my mind, that's always been about kind of avoiding costs, and maybe there's like some dojo like training as a service, kind of capability. But the upside has always been like autonomy and then bot, which you're using this to train from. And it's like the classic make versus buy decision. Like, and in a make versus buy decision, it's not like you're going to save, I don't know, like 60% of your cost by making it. There's, it's maybe it would work out that way, but then you're talking about like a minor cost reduction in your training stack, which like these H100s are expensive. Let's not like avoid that, but look at like the CapEx that they're spending. It's like several $1 billion per year, and put that in context of the upside opportunity with FSD. Like the upside is way more important than whether dojo works out or not. In my mind. So I of course still hope it does work out. I think if they could do some sort of house-built computer that they could license out a la AWS, that'd be really cool, and like a new top-line business opportunity that we could start maybe thinking about. But in my mind, that's not nearly as important as do they actually solve FSD with whether it's with NVIDIA chips or Dojo chips. So I just wanted like what actually matters. And I think it's important to kind of underline that point, that solving FSD is what matters, not which chips it's done with.
Yeah,
I like
the.
Go ahead, Herbert. No, I just want to say I liked his wording saying I'm hedging with NVIDIA chips. When you hedge, you still have a plan A, right? Your hedge is to secure plan A. So I do believe the Dojo is still plan A, but the hedging is obviously necessary.
Okay. Yeah. So I think, it's just a little sitting here a little bit longer, 10 minutes as we are talking, it's kind of crystallizing a little bit. So what matters most? What really matters most, right? I really wanted them to hammer that this is a robotics AI company. They didn't do that, but they did mention that at the end when he was in a question. Having said that, if you listen to what they have actually talked about, that was really good news. One is FSD is actually rolling out to customers in the next couple of weeks. So maybe in a month or two, it's rolling out. That means it's moving along quite nicely. They talked about it being compute constrained, as we know. They talked about that this, the compute that Tesla has, if you include the car's compute, could be the largest compute ever combined. That's incredible. And then, of course, the bot as well. So the bot, you got to remember what words he used. He's basically talking about, the bots being delivered. That that means not just to their own use, but actually to, outside customers next year. So that does not mean that they're not going to start using the bot in-house at smaller numbers. But that looks like that's still very impressive. He spent a long time talking about incredible lab, the things that they're accomplishing there. So those are the things that really matter, right? AI, full self-driving, the bot, and the compute that they have. So it's still the long-term story of what this is that differentiates itself from any other company. Then, of course, he's iterated twice. This could be the largest company in the world. I see the path for it to do that. It's, I think it's we're still on track.
Yeah, I was just gonna give Matt and Emmett, who's no longer here to show off his amazing pecs for us, huge kudos, because I remember the interview that y'all did with Gary Marcus and Naveen Rao. It's been a number of years back now, and I was especially impressed with Naveen on that interview, even though Gary kind of took up a lot of the airtime. But his commentary there really helped to level set expectations for me on the performance of Dojo and really what the expectations were going to be for how much it could contribute to this training effort that they were going into, and gave me a ton of extra respect for Jensen Huang and NVIDIA and just how incredible that team is. And, they have gone basically head to head with Tesla's chip design, and where Tesla was able to eviscerate the competition in inference. And there's nothing that really comes close to hardware 3, hardware 4. On the training side, NVIDIA has not only kept pace, but really stayed ahead, and maybe not necessarily on an energy standpoint, but really from a whole system perspective. There's a lot of parts of the stack that are built on top of the chips that are really things that are much more difficult to replicate than just the chips themselves. And so, there's a lot to be said for CUDA, and then a lot of the support that a lot of the ML stack has for CUDA specifically that's really not present in other things, that makes it really, Elon said he wanted it to just be a drop-in replacement where you just replace CUDA with Dojo in, one line of your code, and then it just seamlessly swaps over. And while that may be the aspiration, that's really, really difficult to achieve in practice. And so anyways, I think that a lot of people have been very, very optimistic about the future of Dojo. And I think that listening to someone like a Naveen Rao definitely will help you to have a little bit more robust understanding of that field, and maybe give you expectations that match a little bit closer to reality.
Yeah, I think we can all suffer from being in the bubble a little bit too much. And that's why, Emmett and I always tried to have, people from outside the bubble to kind of share their thoughts and expertise. And what really struck me with that conversation also, Hans, was like just how impressive what NVIDIA was doing. And, like if you just watch the Tesla presentation and you see all the amazing stuff with that they're doing with Dojo, you're like, yeah, that makes all sorts of sense to me, who doesn't design chips in my day job or work in AI. So really looking for those outside perspectives in order to kind of hone in on the truth is something I really encourage all the investors out there to do. Naveen Rao, for those who don't follow him, he's a great follow. Gary Marcus is too. He can be like extremely negative, like bordering on too much for my taste sometimes. But I think it's also helpful to have people like that you're following. So I'd encourage everyone to give them both a follow on Twitter. X still can't do it.
Just thanks I agree with those comments too, and that perspective, especially having an external perspective. Just two things. One is there was a conversation, and when they got into the COGS discussion about forward leveraging and renegotiating contracts. What that means is suppliers, look what we've done for you in the past in terms of growth, and then look at these new projects we want you to bid on that have, we're asking for even much bigger numbers on these. And what you do in those situations is, number one, you get leverage on those future projects, but what you do is you actually utilize them for the current projects in production. So that's what that means. I've been talking about this with Herbert, and that's what they're doing, and that's one of the paths to getting some unnatural and continuing COGS reductions. Those are harder to predict, so that's why you hear them. That's why you heard the CFO and you heard Elon saying, like, this is difficult to predict, because it is, but it's happening. And there's no auto company, there's nobody that makes an automobile that's in a better position to do this than Tesla. So that's why they're actually going to get relative and outsized improvements on COGS for that one factor. The other factor is they're actually organized differently than most advanced electronics companies and auto companies, where you heard the vigor and the energy from Lars and from Drew. I'm like, hey, we've got our own list of things that we're pursuing from a COGS perspective. I've been in that position, and we're kind of on the other side of my engineering partners, and I've worked with great engineering executives in the past. It just sounds a bit kind of to the extreme in terms of how they're organized. And they have this culture of cost. It's different than other companies. So anyway, I think the COGS reduction program is going to continue, and that forward leveraging of new projects is going to be a big deal. And I think we'll see the results of that. The second thing I want to talk about just really quick is I've also been in this position of when you're moving into a space that your suppliers are already in, and how you talk about that publicly. You notice Elon's very sensitive about discussing Tesla's own battery production relative to their partners. I believe the same conversation is that regarding Dojo. They're in a very precarious time where the H100s and the H200s are on 52-week lead times or on global allocation. And one way to get yourself knocked off on allocation is to basically publicly tout and brag that you are in competition with whom you're trying to get chips from. So for him to be as magnanimous as he is, and he's always kind of been that way with NVIDIA. He's never, but I mean, NVIDIA makes north of 70% on these chips, and they've got to, Tesla's got to, continue to receive supply of these while they're bringing up their own solution. So don't be surprised that entered into the equation in terms of how Elon talked about Dojo. I don't doubt that it's difficult. I don't doubt that there's challenges to it at all. I'm not trying to sugarcoat it, but that is part of the equation in terms of how you speak publicly when you're entering into competition with someone that you actually need something from.
Fantastic points all around, Jeff. Thank you very much. Any other final thoughts before we wrap this sucker up? We're 3.5 hours in. Going once, my dog. Going twice. Sold. Okay, here we go. Thank you all very much for joining us. It was an absolute pleasure. Jeff, Hans, Herbert, Matt, Nick, Yashu, Alexandra, Gary. Who am I missing?
Your dog.
My dog. Thank you very much to my dog. Great job, dogs. Yeah, if you enjoyed this, like, subscribe in whichever channel you are following this on. We do this every quarter. And then next quarter, Herbert's going to drive the ship because it was freaking out in the private chat. He's like, I don't have control. It's all yours, brother. Thank you, gentlemen. Thank you to everybody listening. We'll catch you on the next one. I hope you have a fantastic evening, and we'll see you around. Bye-bye, everybody.